Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracy Brynick, and this week I'm joined by Zach's associate stock strategist, Dan LeBeau, to talk about millennials, the stock market mania, what's going on with those tech stocks, the craziness that's out there. Now, I asked Dan to join because he is a millennial, and I thought he might be able to give us some insights on what's going on with the younger millennials. Now, remember, the millennials are aged about 22 or 23, give or take a year in there, to about 40 years old. So they are somewhat separated by a lot of economists now into old millennials and younger millennials. I guess younger is under age 30 now. Anyone over age 30 remembers and was like an adult during the Great Recession. So I guess that's where the cutoff is there. But we had a big exciting event recently with Apple and Tesla, both splitting their shares. They split them on August 31st. And then there was a frenzy to buy, and various of the brokerages, their apps all crashed when this was going on. Robinhood was down, Schwab was down, Vanguard, I heard, was down. They all got back up, but it was crazy. And Tesla ended up the day of the split up 12%. Apple was up another 3% on the day of the split. And Dan, it seems like every day there's like more craziness, more new all-time highs in the FANG stocks, in Tesla, Microsoft, any of the high growth names, even in retail, like Lululemon is hitting new highs. And a lot of it seems to be driven by you and your friends.
Yeah, no, it's honestly crazy how much momentum we have behind these stocks.
Yeah.
And it's a lot of these new pandemic traders, I like to call them, these people who got in at the last 5 months or so and have seen only upward returns. So they have this mindset right now that stocks can only go up. And it's almost a dangerous mindset, but it's a mindset that's driving the markets, it feels like. I mean, obviously the split yesterday didn't change the intrinsic value of the stock, but people are seeing it as cheaper. Tesla's back at $400 a share. Let's get in. And I mean, obviously the options are less expensive, so those are more attractive. And it's crazy. It doesn't make any sense. Apple's surge is a different story. I think there's more to Apple's story, I think, than to Tesla's. Tesla's story seems like a bunch of fanboys getting into this, not really understanding the true valuation, because this stock is right now trading at twice as much as Toyota as far as market cap goes. And they just built their millionth car earlier this year. Toyota builds more than 10 million cars annually. Yeah. And it's just crazy. I mean, this company, they're pricing in the world dominance in the automotive industry for Tesla, and they only have maybe a 2% share in their own country, the US.
Right.
So it's
the argument. I always hear this about Tesla. It's not a car company, it's a tech company. So I'm buying it for the technology that they're creating and not the actual car.
So are we buying the battery? Like what are we buying here if we're not buying the automotive?
Use this argument on me, and I don't know what that means.
Mm-hmm.
But
yeah,
they have a lot of patents on certain technologies and whatnot that are going to change the world, apparently.
Yeah, I mean, I guess there's two sides of the story. I've heard people saying, the $7,000 price target, obviously before the split, with all the arguments you had, all their proprietary, the patents that they have out there. But at the end of the day, it is an EV company, and it will continue to be an EV company. But people are betting on the Elon Musk. I don't know if you've heard of Wall Street Bets. But they call him Daddy Elon and Daddy Musk because he's driven so much returns for these overzealous traders that have just bought ridiculous OTM options on these shares and just made an outrageous amount of money. And it's crazy to see, especially in an environment where algos are driving the trade. And people are wondering, how can these retail investors have so much, clout, you could say, in the markets? And I feel like a lot of it has to do with the fact that a lot of these algo trades are based off of order flows, and when you have tens of thousands of contracts being written for Tesla on a 10 to 20% out OTM, these algos are going to buy it up, and it's kind of a chain reaction. Have you looked into much of this algo trading and how it's impacted the retail investing?
No, not at all.
Yeah, no, it's interesting. It's the domino effects. People are, like I was saying, people are saying that retail investors don't really have a lot of pull because they're so small compared to these institutions. But these institutions are queuing themselves off of the retail investors.
Yeah. So is this mostly just trading that's going on? How much actual investing is going on?
Yeah, I say investing, but you're right. It is a lot of trading.
Okay.
My roommates right now, like they're, I don't know. I think a lot of it has to do with boredom in this stay-at-home pandemic situation. People are getting a lot more interested in, I mean, especially after the huge boom we've seen in the stock market. Obviously, people are like, let's see if we can find opportunity for ourselves, and they're getting their cues off of Wall Street Bets. Just people saying, buy this stock, buy that stock, and if they get enough people behind it, I mean, Wall Street Bets has 2 million followers. This is a subreddit account, and they get 2 million followers. They can get 100,000 people to follow them into this one option. They're going to move the market.
Yeah. Okay, so that's where they're getting a lot of their trading information is off of various Reddit accounts.
And I mean, there's other things too, like there's a lot of different blogs and whatnot in trading view. I'm sure you've seen, and StockTwits. Obviously, you're a big contributor to StockTwits. I've heard, right?
Yeah, I like StockTwits. It has a lot of good information over there. But
Wall Street Bets is exactly what it sounds like. It's people wanting to get rich quick, and you see both, the huge upsides and the huge downsides. Like you see people going from $50,000 to $1 million in a matter of a couple weeks. But then you also see people going from $150,000 to zero. People are gambling in this site, and they're touting both of those.
how many people are doing things like, quitting jobs or whatever just to trade? Are there any? Have you heard of any of your friends doing stuff like that?
I have not met anybody that is that risky.
Okay.
But there are those people who think that they know what's going on in the markets, and they follow people like Dave Portnoy. That's another one. And Dave Portnoy, I feel like, is the epitome of this pandemic trader. He does admit that he knows nothing and he has all these disclosures, but people are following him into positions. He's got hundreds of thousands of views on a lot of these podcasts he does, and it's crazy. He can move markets for a lot of these biotech penny stocks that he invests in, and I honestly think there's a little bit of market manipulation involved there, but it's he has all the disclosures to get away with it.
What about the FANGs? What is the, other than Apple, which we kind of just glossed over about them splitting their shares, are a lot of the millennial traders out of the FANGs because of the price points there? Amazon's almost $3,500 now, and that makes it harder to mess around in. But do they see FANG as having like the same coolness factor as like the Teslas, or is it kind of seen as older and stodgy and who cares about Alphabet?
Well, I actually think that a lot of millennials see FANG as not much of a trading opportunity, but an investing opportunity. So a lot of the portfolios that I've seen, people aren't trading FANG; they're buying it long term. And with the fractional shares you can invest in nowadays, you can buy Amazon. You can put like $100 in Amazon with Robinhood's fractional shares. So that's kind of changing the game of what these small retail investors can and can't do.
Okay. What else are they buying long term? Do you know? Does anyone say, like, what are the popular Is it the semiconductors? Is it, some of these hot retailers? Is it Peloton? Is it?
I've seen a lot of Zoom and Peloton in portfolios. I'm apprehensive about those. NVIDIA is a big one. I love NVIDIA. I'm not sure about its current valuation, but there's a lot of interesting picks. I think people are starting to shy away from Netflix a little bit more because of all the competition in the space.
Okay.
AMD, that's a big one. People love AMD. A lot of the millennials are investing in that long term as they surpass Intel and their CPU components.
But if you take a look at AMD, there is a reason why those shares are surging. Like there is some fundamentals behind that stock rally for them.
Mm-hmm.
So
absolutely.
That feels a little different to me than some of these others. And I took a look at NVIDIA just a recent bit ago because I was curious to see what are the fundamentals doing for them. Now we have it as a Zacks 4 sell for some reason, and even though all the earnings estimates are mostly higher on our estimates, so I'm not sure why it's fallen to a 4, but that'll change. But their earnings growth is crazy, like 56% this year and another 20% next year. And they're old. They're an old company by all, like Silicon Valley. They're not as old as Intel, but they've been around for quite a long time now. They would be considered a mature company. And to grow your earnings at 56% when you're that old is impressive. So
it's this pivot towards their data center chips. I mean, the GPUs are becoming so much faster than even AMD and Intel's CPUs, and they're becoming integral in the development of AI. And I mean, there's not much debating it. These chips are going to be, a crucial part of developing true AI. And right now, I mean, I think they're in 8 out of the top 10 largest supercomputers in the world, and in 2/3 of the top 500 largest. And they're only going to be more essential as the technology continues to develop. So back in the day, let me just give a little background information. The GPU is the graphics processing unit, and it was used just for rendering images for gaming. But they've gone past that, and now the technology is pushed more towards data centers. And actually, the last quarter was the first time the data center revenue surpassed their gaming revenue. So it's really showing that this company is headed in that direction.
Yeah, that was really impressive. Okay, like getting out of tech, what about things like, healthcare or any of those? Are there any people really, interested in trading any of those biotechs? Those used to be among the hotter stocks for people, looking for big breakouts and all that. And I know some of the virus stocks have soared and have been heavily traded, like the Novavaxes of the world, Moderna.
Yeah. My concern about all these vaccine companies is that once they do develop the vaccine, they're not going to be able to have proprietary possession of it, I don't think. I think the government's going to, if the government doesn't, society is going to tell them that they need to share this information with everybody and allow all of the biotech companies to manufacture this. But I haven't seen, obviously people are invested in, Moderna and Gilead, but I honestly don't see the massive upside from this vaccine.
Okay. Now, we talked about Dave Portnoy briefly. Is he the investing hero of a lot of millennials? Or, what do they think of like Warren Buffett, who just turned 90 years old? Do they check in with him and see what he says? Do they not care? Do they say, oh, he's so old, forget him? Who is the investing hero? Is it Dave Portnoy?
I hope it's not David Portnoy. I'll be honest. Like the guy, I don't want to call him a fool, but he's a gambler. He's not an investor. He's not even a trader, barely.
Right.
He's a gambler, and he's been successful on some of his trades. You see him on CNBC talking about it, but he's He is a gambler, and that's kind of what this new pandemic trader is. And they've been successful with it because the stock market's only gone one direction the last 6 months.
Yeah.
But as far as Warren Buffett goes, my opinion is Warren Buffett is sticking to his old value strategy, which is becoming archaic in some ways. He didn't do anything during the pandemic except sell out of some airlines. He bought into gold recently. Yesterday, I think I heard that he bought into 5 different Japanese companies, including Mitsubishi. But he's acting a little bit too slow. I think his value investing strategy is a thing of the past, and he can't keep up with these algos anymore. I mean, back in the 80s and 70s, and the last half century, he was able to take advantage of the slower markets. He was able to find opportunity that was there, and profit off of it. And I think these algos are seeing that value trade way faster than he can, and jumping on top of it way faster than he can make a move. And it's upsetting to see. I mean, I've followed Warren Buffett, for the last 20 years, but I think he's really falling behind the curve because he's just too slow.
Okay. Well, we'll see how that develops.
Yeah, exactly. I mean, yeah, it's right now we're in a growth mania high right now, and who knows how long this will last. Eventually we're going to have to correct back down to reality, but the low interest rate environment is propelling this.
Oh yeah, but that's my next question. What happens when we do have some kind of pullback? We have to have at least a pullback, 3 to 5% at some point. We're going to get at least that. What happens to these pandemic traders when there is some kind of significant,
And that's my biggest concern is these guys are getting more and more confident in every trade they make. And as the stock market continues to rise, they're going to bet more and more on, far out of the money options, higher risk. And it's going to be concerning when things do actually turn around, because it could be, a huge, quick turnaround. And there's going to be a lot of these guys caught on the wrong side of it. But, obviously with the election looming, volatility for these presidential elections usually spikes between, the 3 or 4 months beforehand going into the election. And I could see that as a catalyst for a pullback.
Okay. Yeah, definitely. There's a lot that goes on right around presidential elections.
Mm-hmm.
Okay. So, but we should expect, until there's some kind of pullback, that this kind of frenzy and interest in the stock market sounds like it's kind of here to stay.
Mm-hmm. Oh yeah. I mean,
once you get tuned into it, has been my experience from the 1990s boom. It's a lot of fun, right? And you're making money, and it seems super easy, and you stay interested for a while, especially if you continue to make the money.
It just makes me I'm super, what's the word? I guess against the trend is my thing. I've been trading a lot of QQQ puts. I mean, I've been doing all right with it based off of, overbought and oversold indicators, but I can't hold on to them because the market just keeps going up. So I don't know. I'm trying to figure out when we're going to hit this peak. And these last couple of weeks, we're in pretty low volume trading weeks of the summer, with Labor Day coming up next week, and retail investors actually have more pull these last couple of weeks, and we're kind of sauntering up on all these different indices.
Yeah.
But it's when real money comes back into play, the next couple of weeks, that could catalyze something as well.
Okay. What about some of these other trades that are out there, like the gold, silver trade, even Bitcoin that's made a return? I've had some people attack me on Twitter because, I don't know, I'm not a big crypto fan at all, because I feel like you can own stocks and do well. I don't need to own Bitcoin. But I know that has seen a resurgence. What about, those other areas? Is there any interest in those, or is it just purely these FANG, these growth stocks and that stuff?
No, I mean, obviously they're talking about gold, they're talking about silver. My buddy had a silver call the other day that blew up in his face. I'm not exactly sure what. I wasn't following it, but let me see. Let me look at it right now. It's funny because it's up. He must have literally just bought it on the exact wrong day. But this commodity looks like it's had a lot of volatility because he was trading SLVR.
Okay.
I think I'm looking at the day that he traded. He must have bought August 10th to August 12th. It dropped over 10%, but these commodities are subject to volatility.
Yeah.
But I mean,
your friend is trading the ETF then.
He was trading the ETF, yeah, SLVR.
Yeah. Okay.
But yeah, no, people are doing it, but it just seems like my generation just wants to bet, and we have, the time frame to make our money back, and it seems like not a ton to lose. And obviously, my friends personally aren't betting more than they can lose, but it does seem like they just want to gamble.
Right. And there's
but
a lot of other ways to do it right now.
Yeah, no, with sports down,
Yeah.
Is DraftKings back up again, or is that still is that still down?
I don't know.
So I know because the NFL is still on track to start its normal season. I know my buddies are all excited about fantasy.
Yeah.
Whether it lasts or not is a different story.
Right.
But yeah, it'll be interesting to see once sports betting comes back into play if a lot of these retail investors will exit their risky option plays and just start gambling on sports, which which these guys already enjoy doing in the first place. A lot of these pandemic traders.
Right.
But as far as Bitcoin goes, you were talking about that. It has seen a surge, and I'm honestly so interested in what people's mindset is on that. It's like, if this currency was to be the true currency of the realm, it would be worth like $50K for one Bitcoin, and it's like you're gonna buy a cup of coffee for 0.000002. Like it's 236. Like it's just incomprehensible. It's too opaque for it to be a real currency.
Yeah, I don't know. I feel like people are just, seeing it as like a gold substitute in some ways.
Mm-hmm. I suppose.
Nobody's walking around with their gold bars to pay for anything really right now.
No, not yet, at least. Not yet.
Right. Okay, well, this has been an interesting discussion because I did want to get a millennials, viewpoint on what's been going on because I've had many millennials on the podcast over the last several years, and I was always asking about like the Robinhood app, and all of you guys would be like, oh yeah, some people are on there, but it was never like a thing until the pandemic, I feel. And now it's just simply caught on and everybody knows what it is. They're out there using it. Haven't their accounts, I think they added like 20 million accounts or something, right? Robinhood? Mm-hmm. And they were at like 8 or something beforehand, and now they're at 20 million. So that's huge. And that's a lot of people watching the stock market now, which I'm excited about because, again, I feel like once you buy some stocks, even if you're just trading them and messing around, you get an interest in investing and what owning companies can be like, even, for future use, that you may actually invest for longer term later on than just the quick turnaround. But
yeah, I think long term this is a great thing. Market efficacy is important, I think, for anybody that wants to invest for their future, invest for their retirement.
Yeah.
And even if they have to learn the hard way, they're going to learn one way or the other how the markets work. And it's going to be an interesting journey moving forward. One of the things that people have a problem with Robinhood is how easy it is and how much it makes it feel like a game opposed to actually investing.
Yeah. I've heard that I'm not on it myself, but I've seen that they have reduced some of the gaming like aspects of it, the little design parts of it that made it seem like, woohoo, every time you bought something, or like, that's just what I've heard, that they've reduced a little bit of that because of complaints.
Yeah, I don't know. I feel like every time I buy into something, it gives me some confetti flying down.
Okay.
It's all excited about it. It makes me excited too. I'm like, wow, this is awesome.
Yeah. So yeah, we'll see what happens here when we finally do get a market correction with all these new investors / traders in the markets. It's going to be interesting. Scarily, some of it makes me feel a little ominous about what happened in 2000 when, a lot of new investors got in then and didn't have that long a time to really celebrate before it really got, sold off hard. But
and that split surge with Tesla and Apple, I mean, makes it feel like we're topping.
Well, that is what happened at the end of 1999, actually. Someone was tweeting around an article from late December 1999, talking about how all the splits that had happened that month, including with like stocks that we're all still trading today, like Qualcomm and whatnot, they all split right at the end of 1999. And they said it felt like it was a topping indicator. It was kind of obvious to read the article because I had forgotten about the splits. I just remember everybody diving in right at the end. I didn't remember that things were splitting right then. So yeah.
And that's why I'm so apprehensive about recommending any stocks to anybody. My buddy comes to me, he's like, "What stock should I invest in?" I'm putting $500 more into my Robinhood. I'm like, honestly, man, like, yeah. I'm apprehensive to recommend anything. I'm not saying that this momentum drive isn't going to continue, but it's like, I don't want you to buy the peak.
Right. I would agree with that. I've gotten asked in the last couple of weeks too, like, "Oh, give me 5 stocks to buy right now." And I'm like, well, a lot of the ones I like are really, really stretched. And then if I tell them any of my good value plays that aren't stretched, they don't want to have those. They don't want to be in those.
I mean, like, even oil, there's opportunity there, but it's like, it's not the same growth that you're going to see from Tesla or Zoom. You're not making, 1,000% in a year.
Right.
It's a totally different type of play, and people are interested in that now when they're seeing companies, showing prolific parabolic gains.
Right. If you could be in Zoom, why would you buy Exxon?
Yeah. Speaking of Zoom, what do you think about that? I was surprised by how big their gains were, especially after their security breaches that they had in the last couple quarters. Like, enterprises are continuing to use this platform.
Yeah, I feel, and from what I hear from friends, is that Zoom is just easier to use than a lot of the others, including like Google Meets and some of the other ones. It's just it's more user friendly, and that they solved some of the security breaches by putting passwords and things you have to like use to sign in now. So they're not as concerned about that aspect of it. So they did seem to solve that pretty quickly. But my question is, how long does it last once there is a vaccine and, everything starts to reopen and people can go back to school and back to their offices to some extent? Not everybody's probably going to go back, but a lot will. And what's going to happen then? I don't know.
Exactly. So, I mean, it seems like they've gained as many customers as they can. And yeah, once people go back to school, they're going to be using this way less for learning, obviously. Once people go back to work, they're not going to be doing Zoom meetings daily like they're doing now. They're going to be seeing each other in the office face to face. My buddy was saying that they have a messaging app, and that's the primary messaging application, which I didn't even know they had. But yeah, it'll be interesting to see if they're able to maintain their financials going into the vaccine.
Yeah, they're trading at 60 times sales right now.
That's just absurd to me. Like, how do you justify that?
I don't know. I cannot. So I'm not in that one.
Yeah, I mean,
but if you are,
what was it up today after earnings? It was like 35%.
Yeah, but if you have been in it all this time, I don't know. I would still be in it. I would still be riding it. I get asked this question too: should I sell my FANG stocks?
Yeah.
And I feel like no.
Yeah, I'm not selling anything. I mean, I'm bullish long run here. The Roaring '20s, I think it's going to be a great decade for stocks. But
So
I'm a little bit
like the 1920s, like 100 years. Okay.
Exactly. I'm a little bit apprehensive going into this election. I don't want to get too political, but if there is a blue wave, there's going to be some changes that could negatively impact the markets.
For sure. But the markets will start to telegraph that soon if it believes it's going to happen.
But that's the thing. It's like, how much can you trust the polls?
Well, right. But the stock market will start to do stuff.
You think so?
Yeah. It did in 2016, at least. It was.
Okay.
And that was a much tighter race. So we'll see. But, anything can happen over the next couple months. That's why it's always interesting to be in the stock market around the presidential elections. So, another thing on top of a pandemic.
Right? Like, so much uncertainty in front of us, and stocks are just surging.
Right?
It's unbelievable.
Yeah. All right. Well, I'm going to recap the stocks, but I'll have you back on when we have some kind of, break in the stock market. And we can talk about like what everybody's doing once we get like some kind of pullback, if we do. I mean, we will eventually. I always tell people, trees don't grow to the sky, and neither does the stock market. So eventually we will have some kind of pullback, and it's healthy to have one. It's not healthy to keep going up every single day with these big growth names. So pullbacks are healthy, but let's recap some stocks. Okay, so we talked about Apple, AAPL is the ticker there. Tesla, TSLA, if you still want to get in. We mentioned Alphabet, Google, GOOGL or GOOG. We mentioned AMD, NVIDIA's NVDA. The silver ETF is SLVR. That's the easier one to trade, I think, with the R on the end. And then there's the other one, SLV. Then Zoom Video is ZM. Is that it? That's close to most of the things we mentioned, I think. But there's, all the FANGs, of course, but most people know the tickers for those. And as always, you want to be sure to subscribe so you don't miss a single episode. We are in India on Ghana now. So if you're in India, subscribe on Ghana. We're on Spotify. We're on Apple Podcasts. Where all the cool kids are hanging out. That's where you can find us. But be sure to subscribe so you don't miss a single episode. And I'll see you again next week with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.